If you are new to my first channel, this channel, which is my first channel, I'm just on here sharing educational knowledge with you that I've accumulated over approximately 10 years of practicing law at the time of recording. And for more education, please take a moment to subscribe. And with that said, I'll begin. Acceleration clauses. So when you hear the word acceleration clause, think about your personal loans, your business loans, your mortgage loans, certain sales contracts like installment agreements for vehicles or other purchases. Think about leasing houses, leasing apartments, commercial leases for office space, credit card agreements, certain partnership agreements, joint venture agreements, some refinancing agreements, and other financial agreements or payment arrangements. And the list, it just goes on and on and on and on. There are so many contracts that can have acceleration clauses. That's why the list just goes on and on and on and on. And what an acceleration clause does is it accelerates or speeds up the loan, speeds up the repayment deadline of a loan. And it requires you, the person, or you, the company who borrowed the money, to hurry up and pay it back. Why does it happen? Why accelerate the loan? Your contract might mention something like acceleration of the loan can occur for missed payments on a mortgage, or perhaps you stop paying the rent on your lease agreement, whether it's a residential lease agreement or a commercial lease agreement. Or maybe you have a bankruptcy situation. Or if your loan deals with property and you sell the property and you do not have the lender's consent to sell that property, then the lender's freaking out and thinking, this is a risky situation. I need to be protected and I want repayment of my loan now. That's what the lender would be thinking. And so let's detail it out, for example. If you have some sort of loan agreement and your loan agreement says that you need to make monthly payments on that loan and you miss a payment, there might be an acceleration clause in your loan agreement that will suddenly make the entire amount that you agreed to borrow due now, like right now, for missing that one payment. Now, that's kind of an aggressive form of an acceleration clause. But you know what? Sometimes those acceleration clauses are aggressive. So, okay, here's the good thing. You are a consumer, so you have rights. You're a consumer, so you have rights. If you have a contract that has an acceleration clause, sometimes those acceleration clauses are not enforceable, especially if that acceleration clause in your contract is unconscionable, meaning that the acceleration clause in your contract is taking advantage of you, the individual, or you, the company, because it's likely unfair, or it's unjust, or it's oppressive, or it misrepresents your rights in some other way. Maybe you had a terrible bargaining position, and that position was taken advantage of by the lender who knew about, for instance, your financial challenges or difficulties, and so therefore the lender use that information that was most likely accessible to them to make the negotiations more favorable to them. And that's a super common one. Now, think of some of these banks, some of these big banks, for example. that have so many financial resources and experience and huge operations at their institutions compared to being a working individual earning a paycheck and hoping that a big bank provides you with a good deal. And the bank knows it has so much power and influence over you, even enough to pressure you depending on why you need the loan. That right there can be a recipe for an unfair bargaining position, meaning an unconscionable situation. But what's good about unconscionability, I should repeat that one. What's good about unconscionability for consumers like you, because you're a consumer, is that intent is not required. Intent is not required. So if the acceleration clause in your contract appears to be unjust, unfair, oppressive, or a misrepresentation of your rights in some way, then it does not matter what the lender of the loan's intent was. The focus is whether there is a situation that's really unfair or unconscionable. And the focus is on the entire transaction, the entire contract, and the circumstances surrounding that contract. That's the focus. And if there is a situation of unconscionability, the terms of the contract could be changed or modified or entirely unenforceable depending on the situation and other circumstances surrounding the contract. So understand that if there is a situation that involves unconscionability related to an acceleration clause in your contract, you are a consumer and you do have rights. And another thing, one word, mitigation. If the lender wants to speed up or accelerate the repayment of the loan for, default on the payments, breach of contract, etc., did the lender first try to minimize its damages? Meaning, did the lender first try to fix its own damages? Meaning, did the lender try to do something to decrease the amount of money that the lender is trying to collect from you? That's something to think about. Stay tuned for another video. And if you like the education, please subscribe.